What's up everybody, Tom here with another video. In today's video, I'll be discussing why this particular chart is now one of the most important for you to be looking at over the next week. We'll also be discussing our technical analysis levels for the S&P 500, Nasdaq, gold, Bitcoin, Tesla, GME, and more to really find out and dial in to what exactly happened yesterday. There's a lot to go through, stay tuned. Alright guys, well one of the things that we always like to do when we start these videos together is to be taking a look at what's actually moving in the markets. Yesterday was all over the place, and I think you can see that in this heat map. Let's have a look at what actually happened in the main sectors and indices. So here's the indices, and straight away you'll notice that the Russell got beaten down throughout the day. The Russell's been the strongest market, the 2,000 smaller caps, but now 3.63% down. Nasdaq was down 0.48, S&P 500 down 0.75, and the Dow Jones down 0.93. So not the best day for the bulls. If we take a look over here though, what really was this led by? Well, it was led by materials, led by industrials, and not really tech. Tech actually held okay through the sections and through the market trades. You could see defensives were coming back in because XLP, whenever consumer staples moves and utilities move up, you know that there's a defensive rotation occurring. We'll have to see whether this holds up through the next couple of sessions, and that will show us that Wall Street potentially is a little bit concerned about things moving forward. But one day of utility strength and consumer staple strength is not going to sway me in these current markets. Let's now get stuck into the technical analysis though, and we'll get started with the US 10-year treasuries. They broke through the 1.67 yesterday. We talked about this through the session. They came back down to 1.6, but guess what? It hasn't has as much impact as people thought. And that's because the US 10-year treasuries, while they initially shocked the market, they're not really the most important thing generally to market risk on risk off sentiment when they're within a range. What is more important is the dollar index. And that's why I said this chart is the key to what is going on in the stock markets right now. Have a look at this. We had a shooting star or pin bar, as many of you would know it as. We correctly identified together as a community during our live streams. And if you're interested, subscribe and come check out our live streams. Every single market open during the week in the US, 2.5 hours before it does open in the pre. But yeah, here is the resistance, this 92, or more importantly 91, 96. We broke through it and closed above. Now we move towards the 92.50 resistance, and then potentially dollar actually has some serious strength in it. We've talked about this for some time now in the weekly, and weeklies take time to play out, but we could be seeing a repricing here of the US dollar potentially up to around the 94-ish zone, or at least the 93 area, where it'll intersect with the 50 exponential moving average, the blue line here, and that area is going to be some definite resistance zones. So dollar index strength, what's it mean? It usually means risk off in the market and people start to close positions and move into cash. We're not seeing strong movements. I mean, the S&P 500 is 3913, the Nasdaq is 13,083. So while I do believe it'll move up a little bit here with dollar strength, I still think the markets look quite strong from a technical level, and we'll go through that in just a few moments. But this dollar index strength is having an impact on other things, more notably things like gold and things like silver. We saw silver really dive yesterday into those low 25s. It broke through. It was a good day trade. We've also got gold breaking through our trend line that's been set, and it just shows that when you correctly analyze the fact that yes, it's making a series of higher lows, but it's failing to make a series of higher highs, you know that you're coming to the end of that trend. We've closed below, and now we're putting some downward pressure here on gold. Can it hold up, or will it return back to the 1700? We'll probably see in the next session if it can get back down to that 1700 level. Another thing that's moving is Bitcoin. So Bitcoin is a little bit sensitive here to every single move. We've seen some negativity coming out, of course, from the government in the US about the coin and its current pricing, and this is pressuring downside. Now, we haven't had a close under 54,000 with a 4-hour plus time frame. Look at this, see? 54,000, no closure underneath. So this is a critical point at the time of this recording, whether we hold above and we can start to continue moving up, or we close below and we go down after that point, I believe, to the 52,000, if not, unfortunately, a little bit lower. It's all up to the 54,000 level, and most importantly, how it trades around the 4-hour close. And when that occurs in 2 hours 44 after this video, we will probably know whether this thing can hold the level or whether it's going to break through and move towards 52 or lower. Bitcoin is one to watch. Come join us in the live session, as I said, because this one will be moving today either way, you would have to think. Let's take a look now around the markets. We've got Tesla. Now, Tesla was a little bit of a disappointment, but still holding the correct zone. 662, nothing much to be concerned about there. As long as it holds above that 650, 660 area, we're still in formation for our inverse head and shoulders concept or idea. 700 will continue being day trader resistance. And then, of course, 720 is the larger resistance that you need to break through. For people that are bearish on this particular stock, you need to close below 623, and that will create an avalanche all the way back down to 550, if not back into the previous support. So we're talking about levels like 500 and 450. And I'm sure many of you don't want to be there, but yeah, that 500 level or 450 level is possible if we close under the 620. That's actually just what could happen for Tesla. And I would hope and want it to hold this level over the next couple of sessions to continue that formation so we can move forward on it. Speaking of, I guess, negative sentiments coming through, we did think that this was going to occur on AMC and GME. We spoke about it extensively based on these closes here, being unable to penetrate past $14. If we can't close above 14 when we try 1, 2, 3 times, what's that telling us about sentiment for AMC? It was not as strong as people had once hoped, and the diamond hands or people holding it just weren't as strong. Unfortunately, that led to a breakdown to 12. Then it bounced a little bit off that level, and now that we're back in 1066, it seems inevitable that AMC will possibly go back down to the 10 before buying more pressure. It's hit the daily 20 exponential. That actually was the previous buy zone, but it's like catching a falling knife right now. So much sell-off. You've got to be very, very careful. GME had its result. I saw after hours it was actually down even further. Let's see how it opens. I want to see it hold a 173 on the close, and we can only tell that really tomorrow after the session. It's important that this holds sentiment, because if it doesn't, every time it's gotten under 173, or even those 150s, it's broken back down to the $50 or $80 area. Remember, it sold off this 173, went down to like $88. If it sells again, I could see it going well down into the 80s and 100s, and I'm sure no one wants that that's in this long. So it's so important that 173 is held during tomorrow's session, and the after hours, we're not looking too good towards this. Good luck everybody out there though that's trading these pairs. Now, when we're talking about actually getting confirmation for market strength, I'm looking at this chart, and this was brought up by a user yesterday or person in the community during our live stream, and I totally agree with them. And that is that while the FANG index looks very, very similar to the Nasdaq, it could present a confirmation close above, which you all know that we love on this channel, before anything else. If we get a movement above this zone and a closure point above this zone before the Nasdaq closes through 13,300, I think it's a precursor that everything else is going to start running with it. So look to the FANG index, look to this resistance across the board here, and hopefully we can get some confirmation follow through. If we get a 2050 cross as well, which will happen as it confirms through, that would be great. And what is all of this predicting? Well, because it's an inverse head and shoulders, it's predicting this movement here on the FANG. We take the distance, we extrapolate it out towards the bull side, and you're talking about a significant new high. So watch this index and continue to check it out over the next couple of days. It will probably be worth it. NDX, on the other hand, very similar pattern, but you'll notice it's a little bit weaker, a little bit further down than the 13,300. We still have the inverse head and shoulders. For the bears out there, what you're looking for is back under this low here this week. So if we get it below 12,700, I expect it to move further down. And guys, where does that put us? 12,300. So if it does get underneath there, that's where I would see it going. It doesn't seem to be a really bad close. I mean, closing above the resistance of 13,000, so finding support there seems pretty good. At the time of this recording, the actual market's moved up since this point, 13,084 on the NAS. Hopefully we go towards this level. But check out the smaller time frames. If we go to the futures and you check out like the 1 hour and things like that, you'll notice yesterday's session came straight off that first little bit of resistance we talked about. So here is the resistance that was formed during the pre-session. Then it happened again. Then the support was met. There you can see the support, and now this is where we are. So for tomorrow's session, 13,174. Don't ask me why exactly that's the resistance, but if we break through that, 13,300 is exposed for day traders. Closing below the 13,000 for the session could bring us back down into 12.9, if not 12.8 zones. So there's quite a lot of 100-point zones that you can argue and go for through the day trading sessions. But 13,084 has me thinking we can move towards the 13,174. And then if we close through that, the 13.3 seems in sight. Break above 13.3, we've talked about it. It triggers a huge amount of buying, and risk is back on in the markets, even if the dollar index isn't agreeing with you. There might be some chop city before that happens. Now, I wanted to talk about the Russell. We haven't covered that too much on the channel recently, other than just generally discussing it, because the Russell is getting belted and it's had some aggressive moves on it each way. It's definitely a very, very highly priced index, and you can see that by the move here since October. It went from 152 on IWM all the way up to 234. A little bit maybe too fast, too quick. Go over to that weekly, notice where the 20 exponential is. I could actually see the Russell underperforming the rest of the markets right now and moving back down to support around this zone, 207, even though the rest of the market might be slowly moving up. And that can happen. Sometimes the Russell underperforms the rest of the market. Support will be found most likely around this area where the 20 exponential moving average is on the weekly. Remember, that is the most likely pullback, reversal, correction, whatever you want to call it, to level in the market. You look at any stock, you go a weekly 20, you look at any kind of position, a weekly 20 holds up incredibly well. I'll show you that even on the SPX. Let's have a look at the SPX. Wow, look at this, weekly 20, weekly 20, weekly 20, weekly 20. It's just a beautiful area to keep in the back of your mind. You could put this on a wall, guys. You could literally just have the weekly 20 as key for corrections, and it would serve you quite well throughout time. So where are we with the S&P 500? Well, it's just not as interesting due to these crazy rotations across the board than the NAS. The NAS seems to be showing the better trades, the better potential, and just overall the better positioning. S&P 500 still finding daily 20 support. Nothing to be concerned about here. A break under 3,900 might kind of start to stall sentiment, but as of the time of this recording, we're at 39.13, and as I mentioned before, the Nasdaq is still showing strength throughout the sessions. It doesn't matter what Jerome Powell or the rest of the Fed are saying. It is still moving in a general direction. It's just that now we have the dollar going up as well. Hopefully everybody enjoyed this video. If you did, please remember to subscribe and of course hit that like button. I appreciate all your support out there at the moment from the community, and I'll see you in the live stream 2.5 hours early before the market opens for this Wednesday. Bye for now, guys.